So welcome to the next version of the Financial Intelligence Mindset podcast. And we bring you different guests from different backgrounds, different businesses, people with different journeys. And today we got Henry Vaughan with us from Bondford, and he's been providing foreign exchange services for businesses that have a foreign exchange risk. So Henry, welcome to the podcast. Please tell us about your backstory, maybe how or why did you start this business?
Yeah, Roy, thanks firstly for having me on. It's a pleasure to be here. To give you some context, I've been working in foreign exchange now for 10 years. Initially, I worked at a foreign exchange brokerage here in London. I moved to a competitor, spent a few years there in a slightly different role. Then later moved into a consulting business and set this business up, Bondford, 3 years ago. The rationale for setting the business up was that I felt there was a lack of vendors providing high quality, high touch risk advisory services to our target segment, which is, upper end SME businesses, mid-market businesses who are typically underserved via their relationship banks or who do not receive essentially that support that they require to manage what for them is quite increasingly complex financial risk, specifically around currency.
Yeah, I got it. So talk to us, right? So someone listening to this podcast, maybe they're a business owner, maybe they're in London or the US where this podcast is heavily listened to, and they hold financial risk. I mean, how big is, say, I know obviously currency risk is one aspect of financial risk, but how big is, say, currency risk for a business that's, say, in one country and doing business with businesses in another country, another currency?
I guess the question of how big that is, it depends obviously on the business itself and the extent to which their cost base or revenue base is in foreign currency. Mm-hmm. But in short, it can be, very significant. Profit margins can be materially impacted by exchange rate volatility. The balance sheet, asset and liabilities can be impacted. And there's just a wide range of areas in which firms can be exposed. Even sort of debt to equity ratios can be impacted. Covenants can be breached as a result of currency market volatility. It can impact a wide variety of businesses in a wide variety of ways.
Yeah. It's a big thing. Because I remember when I was working in Aviva, actually, I was working in reinsurance, and I remember the asset liability management the processes wasn't that robust, and I actually helped them to save, you can say, around 3 million pounds in 1 year, just by making sure that they had the assets and the liabilities were properly matched. Because obviously, if there's a mismatch between assets and liabilities, what happened is that if you now have a lot of liabilities, say in US dollars, and you have assets in sterling, and you have to make a claim. Now you have to convert. Now, if you have a big US claim, you have to convert, say, sterling to US, but we know that the exchange rate varies from time to time. So what we had to do was make sure that they have a good process for keeping the assets and the liabilities in the same currencies. Yeah. So with that in mind, what are some of the main kind of businesses that you work with based on your portfolio of clients? I mean, what kind of businesses do you see are the typical ones that has this need for your service?
So we're obviously based here in the UK primarily. So a lot of our customers are UK based or have their headquarters based here in the UK. They may have subsidiaries overseas, but headquarters here in the UK typically. And they are primarily importers or exporters of goods and services.
Yeah.
They operate on a global scale in one fashion or another. So businesses who are susceptible or sensitive to exchange rate volatility, where their income statement, balance sheet, etc., it can be materially impacted by even relatively small changes in exchange rates. So that's our typical customer. The other type of business that we would engage with is, fund managers, asset managers who are, global investors, who either may want to protect themselves from exchange rate volatility and the impact it has on the actual assets they own internationally,
Yes.
or they may want to set up hedge share classes for their investors to protect them. So yeah, we deal with corporates and financial institutions. We don't deal with retail clients. Our focus is more on businesses that are, like I said, materially exposed to exchange rate volatility.
Okay. All right. So talking about the exposure. So say you went into a business and you were just assessing them. You wanted to understand, okay, do you have an exposure to foreign currency or foreign exchange? I mean, what are some of the things that you look at to say to really assess their risk, assess their exposure?
Yeah, I think there's two different sides to it. If we focus specifically on transaction risk, so there's the risk that is immediate, that's on the balance sheet, booked transactions in foreign currency, or there's anticipated transactions in foreign currency. And we kind of separate those two between a cash flow hedging program and a balance sheet hedging program. So what we want to understand is, what is a business going to be exposed to over a longer period of time, and we would look to hedge or build out programs that assess the risk that is related to forecasted transactions, and then look at what's actually on the balance sheet for this month, and that's crossing over various balance sheet or reporting dates.
Yeah.
So we want to know what the foreign currency cash flows look like and what's on the balance sheet.
I got it. So cash flow and balance sheet are two of the main financial statements that you look at. So and from a cash flow forecasting, just generally, from a risk controls perspective, foreign exchange risks, how important would you say is for a business that has such exposure? How important would you say is cash flow forecasting, cash flow management?
It's absolutely vital. Having stability, predictability in cash flows is, that's what keeps the business running. It's the lifeblood of the business. So having systems, controls, processes in place to accurately forecast cash flows, but also protect cash flows, which is more of the business that we're in, although what we do also can help with the predictability of those is vital. As a business owner or a finance person, you want to know, right, in 6 months' time, what's our cash flow look like? 12 months' time, or ideally, the longer the horizon, the better.
I like it.
Govern what the you can make important financial or strategic decisions based on that.
Yeah, it's amazing you said that, because even me, like one of the main services I actually provide now as a freelance, if you want to call it CFO, accountant, consultant, I'm actually zeroing in on cash flow management, because I realize that a lot of businesses, I think if you look at reasons why businesses fail, I would say poor cash flow management is one of those reasons. And then if you look at a business that has exposure to foreign currency, that's even compounded, because now they have cash flow issues on top of a foreign exchange exposure. You know what I mean?
Right.
Yes. So that makes sense. So for a business, so once you assess the risk of the business, I think you mentioned a couple of hedging tools that you have, or hedging, I don't know, initiatives or programs. Can you talk to us about, like, for someone who has exposure now, how do you tend to kind of minimize the exposure to an acceptable risk, if you want to call it that?
Sure. Obviously, any strategy that we provide is going to be tailored to the unique needs of any customer, and they're going to vary in terms of what their business model is, their cash cycle is, so on and so forth. But to start off on the actual products that are available to customers in order to hedge currency risk or mitigate currency risk. They've typically got, only a handful. So there is forward foreign exchange contract.
Yep.
Swaps, which is, similar to an FX forward contract. And you have currency options, FX futures, which is more of an exchange traded risk management product. It's not OTC. And within the options products, you can, extend those out. There's loads of weird.
Different kind of options, swaptions. Yeah, there's different kind of options. Yeah.
I'd say the majority of businesses tend to use FX forward contracts for managing their currency risk, because it's a more simplistic tool. They also provide quite a lot of flexibility in terms of being able to roll or draw down the contracts. Options are obviously exercised on specific dates. If you have cash flow delays or so on and so forth, it's quite hard to roll those contracts on. You have to settle them. But those are the products. And in terms of, hedging strategy per se, again, it depends on the business, but typically what we endorse or see as a best practice of hedging forecasted transactions is a layered hedging approach, or that's what we call it, where you are essentially hedging near-term risk, say up to 3 months, with a higher hedge ratio. You may look at 80% hedged on your 3-month forecasts, and then down to 3 to 6, you might hedge 60, 6 to 8, you might hedge 40, and the layering continues. And as you get to the end of that 3-month period, you then top up the 60 to 80, and the cycle continues. And what that provides is essentially a sort of dollar cost averaging effect. So you're smoothing the exchange rate over longer periods of time, which in turn provides that stability in your hedge rates, average effective hedge rates.
Wow.
Businesses want primarily. You do get cases where businesses are slightly more speculative in terms of their views on foreign currency. It might be more tactical in their approach, in which case maybe they adjust the hedge ratios accordingly to suit their needs in terms of providing less cover in situations where they believe the market's going to go higher. Again, from our perspective and the best practice, we don't really believe in speculative risk management processes. We prefer to endorse rules-based systematic approaches to currency management, because again, our view is that it's very, very hard to reliably and consistently predict currency markets.
Interesting. Yeah, I mean, it's a number of things that a number of questions I have to ask you as you mentioned, as you start speaking about that. But one of the things I'm quite intrigued about is just about your back. I mean, I'm not sure how much we covered it. Like so this is your own business right now. So Bondford it's your business, but before you set this business up, and become an expert, as I would call it, in currency hedging and foreign exchange management. I guess you yourself had to learn a lot about it, right? So can you talk just a little bit about that journey, and also like the journey of coming into your own business? I mean, what was it? What are some of the considerations that you had, say, in staying and work with a consultancy firm or starting your own business?
I can come on to that. In terms of a learning curve, obviously, as I explained earlier, I've been in a wide variety of companies in a wide variety of roles. So, initially starting in sales to relationship management, client dealing on a more transactional level. So actually processing and doing deals on behalf of corporates. And right the way through to being at that consultant business where we were working with typically medium to large size corporates with more complex exposures, advising them on hedging products and strategies. So there's been a wide variety of experience that I've gathered over the years. doing that. Obviously, I've worked with some incredible people over the time who've helped me develop my knowledge, and I continue to learn today. You know, it's a process. I think it's just important to surround yourself with intelligent people who are, keen to find innovative solutions for your customers.
Yes.
Continue to do that today. In terms of making the jump from, and I emphasize jump.
Yeah.
Jump from being an employee to a business owner, that was not something that I did lightly. It requires a very strong belief in what you are about to do.
Yes.
You're doing it. So I would say the process of, making that decision was done over maybe a year or maybe even 2 years. Mm-hmm. So it wasn't something that I just thought, okay, right, I'm going to, go and set off my own business. I meticulously planned and thought about how I was going to go about it, what the risk was in doing that. Bear in mind, it's been 3 years now, and first 2 years I didn't take a salary. It's a big call.
Yeah, it's not easy, man. And it's one of the questions that I ask a lot, like coming on to the podcast. I mean, it's called financial intelligence mindset, but I think I want to deep dive a bit more into that journey of coming into your own business and what are some of your learning points. But I myself make that plunge, of having that security from a job to like now, running my own business, where I provide financial education, I provide financial consultancy to people, and yeah, it is taking a plunge, it is taking a jump, and you do take a dip and say, the amount of money that you will make for yourself. What I do believe is that you tend to serve more people. So, and I also believe that the more people you serve and are able to serve, I believe then that is what generates more income. And then eventually that you can pay yourself. So talk to us about that. So that journey of coming into your business, I mean, from a financial perspective, like, did you do a forecast? Like, did you try to predict how much money you might need to survive for the next, I don't know, year? Yeah. I mean, how do you fund the business? Let's talk about that.
Yeah, I mean, obviously, from a funding perspective, I think startups are limited in terms of their options for debt. So typically it comes in the form of equity. Yeah. And that can obviously either be raised from other investors or put in yourself.
Yes.
Perhaps, I don't know whether I did make the right call in doing this, but I decided to put up the majority of the seed capital for my business on myself, so it's my capital that I'd earned for years, which obviously creates more risk for me, more upside in terms of retaining some equity. And over time, we have sought to get external investment, but at better valuations than what we would have done, had we gone to investment from day one.
And
I think going and getting external investment, I think, is a good thing. We've certainly benefited from people's contributions, not actually necessarily just in the form of capital, but actually, business advice and relationships. I almost see that now more as more beneficial than the capital itself.
I got it. Yeah, makes sense.
So, yeah. Then, sorry, I'm starting to forget what your other question.
No. So basically, we're just talking about like coming into the business and financing the business, and obviously you thinking about your own finances as well, and you making sure, and you making sure that you have enough if you want to call it a cash runway,
Yes,
to obviously not just fund the business, because you mentioned that you didn't take an income for the first 2 years. Therefore,
correct.
coming into the business, you also got to make sure that you have enough cash reserves, I would say.
Yeah, absolutely. And now I recall, obviously, one of the points you mentioned there was, cash flow forecasting, putting together a cash forecast for the
Yeah.
business. I mean, this is, I'm sure you've seen this
Yes.
with your own company or with other businesses that you help. I mean, a cash forecast is great, but particularly at a startup level, can be incredibly misleading.
Yes, correct.
You're often overly optimistic about what you were going to achieve, particularly in the first year.
Yes, yes. I mean, that is true. That is true. I mean, oh yeah, because I mean, even me, my own business, I mean, the kind of targets I have, or I haven't hit those targets yet, but I think when you do a business, you start a business with a vision.
Yeah.
And you keep plugging away. Yeah.
It's good to be optimistic, but also realistic at the same time. I think certainly, and I put my hand up and say I think we were probably slightly over optimistic in terms of our goals and objectives, and what was stated on our cash forecast. So I could probably find our old cash forecast actually from when we started.
Yeah.
I think the forecast actual analysis would probably suggest that we were a little bit optimistic, but I think, yeah, like I said, having you've got to have optimism. You've got to go in with,
of course, ambition. You got to have ambition. Yeah, and belief, as you said. Yeah.
And belief, exactly. But also, again, importantly, as we both agree, having that cash, you need to be able to withstand a decent amount of time to get your business up and running, and generating cash, because it doesn't come overnight. And I think a lot of people are probably slightly naive going in, and I certainly was going into things and seeing a business as a sort of straight line up.
Yes.
It just doesn't work like that. You're going to come across various challenges and hurdles across the way, and obviously cash needs to reflect those.
Of course, yes, but obviously, as you said, very, very difficult to predict.
Correct.
Yeah, because you go, okay, cool. So you've been now for like 3 years now, I guess, and and you have a team of people working with you.
Yeah, so we got 5 people in total, with a range of different skill sets, which is great. We're a small team. We're growing. Obviously, this year's been challenging, but we hope the years ahead are going to be fruitful.
Yes, of course. Yeah.
And hopefully we can grow and expand that team, expand our presence internationally at some point, and continue to grow and provide value to our customers.
Cool. Yeah. So in hindsight, if you look back at like 3-year point to now, I mean, what would you say? Maybe you've already mentioned it. But what would you say has been your biggest learning point?
Oh, gosh, I've had so many.
Or one that you think might benefit listeners, people who are looking to either new in business or going into business, or I mean maybe even from a financial perspective as well, because obviously this is called financial intelligence mindset. So what's a couple learning points that you can say, if I knew, I would have done this better, or I would have made sure I had that in place?
Yeah, I think one thing that I did badly was invest too much time and money into sales ahead of getting the product and value proposition right.
Yeah, it's an amazing how you actually said that. Yeah. So when you say too much in sales, what do you mean? Were you investing in sales and marketing systems?
Stuff like, buying an expensive website, or going to going and putting together brochures, and going out too early. You really need to go to the market, understand the client's needs, and dive deep into that. You're going to have competition. We certainly do in our sector. How are you different? What do you provide that other people don't provide? How are you going to make the client's life better? Spend a lot of time looking at that.
That is solid advice.
Do not rush that.
That is solid. Market intelligence, customer intelligence.
Correct,
and I think what I have learned, as you said, you just put it in context. What you said is that make sure that you have a solid offer, a core offer, an offer that when the client hears the offer, regardless of whether you have LinkedIn followings, regardless of whether you have a website, regardless of whether you have all that thing that goes, wow, yes, you can solve my problem.
Yeah.
I
remember I'm trying to pass the blame on to other people.
Yeah.
I came to the conclusion that, this was quite early stage in our business, that a specific product that we developed was going to be, the bee's knees. This was going to fly off the shelf. So we ended up spending a lot of money building a tech product.
Yeah.
And anyway, built this thing, and it was all based on what I thought the market wanted.
Yes.
Didn't go out and I didn't do enough research and speak to prospective customers about it. And I must have spent well in excess of 50, maybe even over 100 grand on
the product development.
And you go to market afterwards, and I'm getting on calls with CFOs, and they're saying, look, Henry, it's a cool product, I get it, but I don't want to pay for it.
Yeah.
I'm saying, what?
Yeah.
They were like, oh, it's
because it's the value to the business, right? Because your business is basically like, if you want to call it like a value, I just make thumbs up, like a value transfer business, like you want to minimize the risk for them. They want to see, okay, if I buy this product, how will it help my bottom line? Or how will it minimize my risk, my potential losses, how would it help me? So oftentimes you really have to zoom in on the pain points, as you said, not just think about the product, but think about understand the customer. Maybe you probably have been better off going and talking to 10 CFOs and asking them about the problems and asking them what product would help that problem.
Maybe getting them involved in the actual process of the development, getting their buy-in during the journey, saying, look, we're thinking about building this specific feature. What do you think about that? They might say, oh, no, I don't actually think that's going to be worth it. But you know what? This might be a good idea. Then you go to the next guy or, lady, and they say, yeah, I completely agree with it. And you've got much better basis and for building a product that's going to actually sell.
I got it.
Aside from the sort of value proposition piece of, which, I think is overlooked. I think we go into business thinking that, whatever we're going to do is the best thing, since sliced bread.
Yeah.
We talked a little bit about cash flow, that is, if not number one, number two, you need to ensure that you have enough runway. And the runway, if you think it's, there's often a saying with tech development, that if they say it's going to be 12 months, it's going to be 24.
Yes. You mean fintech, fintech or tech, or yeah.
And you kind of ideally want to do the same thing with cash flow. You want to be as safe as possible, because that you can have a great business idea that could take off, and it doesn't because you don't have enough cash runway to support the business needs. You might be able to go and raise some money, but who knows? As a startup, it's
pretty tough.
Luxury. You don't have the luxury of being able to just quickly raise funds like a large corporate.
Of course not. Yeah.
Very, very cautious of that.
Yeah. So I kind of got it. So cash flow value proposition, understanding your customer more than even they understand themselves, understand their pain points, and coming up with an offer that is kind of irresistible and makes them go, yes, I want this offer at that particular price. Cool, cool, cool. So what has been some of or your biggest success then? I mean, since you've obviously learned these things, you've come on, you like you're 3 years in, like if you say, right, wow, this is what we're doing really well now, you know, or this is what we've done really well. I mean, yeah.
I think we've been able to adapt very quickly to changing client needs.
Yeah.
That is one of the benefits of being in a startup, you know, where the decision hierarchies are, you know, it's pretty much me and, you know, a couple of guys.
Yes, yes.
So we have the ability to change course very quickly. And that's been necessary, certainly on our journey. You know, we started off with one vision, and we're certainly not offering the same thing as what we expected to offer customers from the start. But that is what people want. And, you know, that's why we've had certain successes. I mean, we are currently debt-free. We are profitable. We just profitable business. And we have some, you know, decent high-profile customers. You know, you may have been watching the tennis this year. You know, one of our clients is ATP Tennis.
Yeah. Wow. Good.
So we've managed to win some good business, good quality business, build some really quality relationships with people.
Yeah.
And yeah, you know, we continue to go and move forward. I think success also, you know, I don't think it needs to be measured in terms of financial. I think, you know, it can be personal as well. I think, you know, being able to overcome obstacles, grow as a person.
Yeah. It's big. It's big.
Because it's big. It's huge. So I think personally, I feel like I've developed a lot as a person over the last couple of years from going through this process of setting up a business. You have to learn a lot of things that I wouldn't perhaps have learned in,
of course, in school or anywhere else. Yeah, you're right.
You kind of end up doing a, you know, quasi MBA from just setting up your own business.
Yeah. And that is true. And that is true. I remember one young man I interviewed a couple of weeks ago. He is only 30 years old and he's on his 4th business, right? You know, so wow. I mean, to have run 3 businesses in your 20s, you know, yeah, that's pretty awesome, you know. So I agree. So all right, so your business is Bondford, right? So and currently so you have refined your core offer. So how would you describe your kind of your, if you want to call it, your unique selling point, your core offer? I mean, if you had to pitch to a customer, I mean, what would that be in I don't know, in a few sentences?
Yeah, I think we protect a business's bottom line from FX volatility. So we'll protect your profit margins from being eroded due to currency market volatility.
I like that. I like that.
And we will do that in a way that is cost effective and administratively not burdensome for our customers. So that is the bottom line. You know, when we're involved in risk management, we're interested in reducing risk for the least possible cost. That is what we do here. That's how we help businesses. You know, in terms of refining the offer, you know, a sort of slightly touch point, the point that we had to adjust what we were doing. You know, initially we started the business as an independent advisory firm. So our fees and revenues were generated in consulting income. You know, we would go to clients and say, right, we're going to do this project for you. And the project is going to cost X. Yeah. And over time, we've managed to get into a position where we're actually able to execute on the FX transactions, which is a cost that's already incurred by the client with their bank or brokerage firm. So what essentially we're doing is we're able to provide our consulting service that's paid for in a transaction cost.
Yes.
Which is a win-win for the customer. You know, they are getting a competitive rate from us in terms of buying their currency, but also they're getting, you know, high quality, high touch advisory services from us, which is paid for in a spread, which they're already paying.
Okay, I understand. Me. So I guess do you actually negotiate the rate now with the bank for the customer?
Yeah, well, it's between us and the customer. So the customer would come to us and say, right, I need to buy X amount of currency. What rate can you provide me with? We provide a rate, and they can execute through us.
I can understand. So, but the rate that you provide is obviously is based on a rate that you can get from the market.
Correct. Yes.
I understand. So, and as you said, they execute through you. So, as you said, your fee is in the spread.
Yes. So it's a back-to-back transaction. The client executes or agrees a rate through us. We then agree a rate with our banks.
Of course, yeah, I understand. But your fees, but your fees are involved in that spread that you said. I mean, there's a half a percent or whatever it might be.
Yeah, and we're very transparent about that. I mean, for customers that come to us purely for transaction FX, you know, our fees are not going to be high. You know, they're going to be pretty competitive because, frankly, that we're not doing an awful lot.
Yeah, I understand.
I shouldn't say that, but you know, that's the truth. You know,
I understand. Yeah.
You know, I would say 90% plus of our customers are people who come to us though for the risk advice.
Yes,
you know?
I understand. Yeah.
The thing is, in FX, it's the transactional piece is fairly well commoditized. You know, you can go
to your bank. I mean, it's easy. I mean, I said I worked as a financial controller in banks, insurance, asset management, and it's easy once you have assessed the risk and you know what adjustments you need to make. Then it's easy to go to your bank and just say to them, okay, I want to buy and sell these currencies. However, doing the asset liability management or doing the risk assessment or putting the forward and the hedge in place, that requires specific skills.
Correct, exactly. And that's why, you know, we're not marketing ourselves as a brokerage firm, although that's the way now in which we monetize our service.
Yes.
We do not associate ourselves as a brokerage firm. It's purely as a means of monetizing our service. So our customers come to us, well, as I said, 90% at least will come to us because they value our input and advice, strategy, solutions for managing risk, and they pay in a spread. And the real value there is that they're going to have to go to a bank or a broker to do a transaction, right?
Yeah.
You know, they're paying for that already, whether they like it or not. So why not come to a partner where you can get the strategic advice
and a competitive rate
at a comparative rate to what they're getting at the moment, if not, you know, in some cases better. Cool. So that's how we operate. Whereas before we were charging consulting fees, I think maybe you can attest to it. There's almost like a psychological issue around paying consulting fees.
Yeah, I mean, people don't like the word consultancy so much. I work with a few big clients now, and I say to them, what we are doing is a transformation. I call it finance and business. I call it finance and business transformation. You know what I mean? So, and I tend to call myself more, rather than a consultant, I tend to say more, I'm a financial expert.
Yeah.
Rather than a financial consultant, you know, because just the word consultant sounds a bit. I mean, my client might call me consultant. You know what I mean?
Yeah.
But I say I'm an expert, or.
I think the issue in or historically, what we found was, you know, customers are therefore having to pay two different costs. So they have to pay us on the consulting side, and then go to the bank and pay them to do a transaction. Whereas now we're doing the end-to-end flow under a single price. It's important to note as well that we don't, particularly for the larger businesses that we work with, we're not asking them to do all of their FX business with us. It could even be as low as 5% of their total FX business, or 10%.
I understand. Yeah, it's more advisory. It's more advisory, as you said. Yeah.
It's just a way for us to generate income for providing value. I think certainly for larger businesses that are, well catered for in terms of their transaction banking relationships, they may have 15 different banks that they work with, or some of whom provide debt facilities, credit facilities, other auxiliary value, where the banks expect them to do some FX business with them. And to be honest, the client should do some FX business with them. So we're not saying that, guys, come over to Bondford, do all your FX through us. We're just saying, look, let's work on a commercial relationship whereby we earn, a sensible, modest fee for providing
you a service,
services to you, and whether that's 5% of their volume at again a modest percentage fee, then great. And like I said, we're looking to develop win-win relationships.
I got it. So Vaughan, so just looking to wrap up, or I say Vaughan or Henry, same thing, Henry Vaughan. Yeah. So where can people find out about you? I mean, if someone listen to this and they're like, wow, that sounds like, yeah, man, maybe I got some financial risk, or some currency risk. Where can they find out about you and your business?
So you can find us on our website, www.bondford.com. There's a chat option there. There's options to call us directly. Even set up a meeting directly, I think, via one of the options on the website, book a meeting or schedule a consultation, either or. We'd be delighted to talk. Or you can even find me personally on LinkedIn, just drop me an invite. Very happy to talk, even if it's a case that you're not necessarily looking for something at the moment, or you just have a couple of queries, or just I'm an open book. Come and talk to me. I'd be delighted to talk to you.
Cool. That makes sense. So so it's www.bondfed, BONDFED.co.uk.
BONDFORD.
Okay, BONDFRORD. Yeah, FORD. Cool.
Bondford.
Bondford. I like it. Bondford.co.uk. Is that correct?
.com.
Okay, bondford.com. BONDFORD.com. I get it. Or you can look up Henry Vaughan on LinkedIn, which is where I actually met you. So last question I have for you before we wrap up. What does the word, or what does financial intelligence means to you?
Good question. I think probably having a very good understanding and awareness of financial matters and how they can impact you personally, or in a commercial sense, how they can impact your business. So, today we've talked a bit about cash flow. Financial intelligence on cash flow would be understanding how my business is impacted, by cash flow movements. Do that. Being very aware and of that.
I got it. All right. So look, Vaughan, it's been a pleasure to have you on. I mean, I myself, as I said, I've got to get ready for a meeting. I actually had a call during this, which probably related to that meeting. So let me not keep you. I really appreciate you coming on, and no doubt we will be in touch again very soon. Maybe I've got some clients who I can send your way. Yeah.
Who knows? As I said, even if people are just on the edge, or they're kind of thinking, oh, do I have this risk? What is it? Just like I said, I'm an open guy. I'm keen to just talk and meet people as well. So
of course, and obviously, as witnessed by you being here and just being on here the podcast with me. I mean, it's just one way of you sharing what you do with not just me, with other people who actually listen to podcasts. And it's listened quite a lot in the UK and the US and other countries as well. It's a podcast that's actually growing, and it's a way of me sharing information and knowledge with people. So thanks a lot.
Fantastic.
And we'll
I
speak
like
soon.
the way you're doing, Roy. Thanks so much. And
Yes.
yeah, let's keep in touch. Like I said, yeah, happy to speak to any of your audience on matters concerning foreign exchange.
All right, take care. Bye-bye.
All the best, Roy. Bye.
Bye.